Before we begin, please don't forget to subscribe to our video channel and visit MarketGeeks.com for your free swing trading report. The MACD is a difficult indicator for many traders to learn because it has so many different parts. When looking at it, it almost reminds me of looking at a cockpit flying an airplane. But the key is to separate all the different parts so we know how they work together. The first part is the red line here. This is the MACD line, and that's the major part of this indicator, the red part right here, and that's why I made it red. The next part is the signal line. Now, the next part is the zero line. This is the zero line right here, and this is what we use to determine if numbers are positive or negative. They either go above the zero line or below the zero line. And finally, we have the histogram. And the histogram is the difference between the signal line and the MACD line. So here's the best way to organize this. You have the fast-moving average and the slow-moving average. The red line, which is the MACD line, is the difference between the slow-moving average and the fast-moving average. The histogram is the difference between the signal line and the MACD line. Both red line and the histogram represent the difference between two calculations. For this exercise, I'm only going to focus on the MACD line and the zero line. We're going to ignore the signal line and we're going to ignore the histogram. So forget about the green line in this exercise and forget about the histogram. We're going to discuss both of them at length tomorrow. And I will show you how to tweak some parts of the MACD to make it better or quicker for short-term trading. But today, I only want to focus on these two moving averages and the MACD line. Now, as I said previously, the MACD line is the difference between the slow-moving average and the fast-moving average. If you subtract the fast-moving average from the slow-moving average, you will get a positive number. A positive number occurs when the fast-moving average is above the slow-moving average. You see the MACD moving upwards when the fast-moving average is above the slow-moving average. When the slow-moving average is above the fast-moving average, the red line here goes below the zero line. So whenever the fast-moving average is above the slow-moving average, you have a positive red line or positive MACD line. And when the slow-moving average is above the fast-moving average, you have a negative MACD. The MACD is below the zero line. Now, how do we utilize the MACD? It's very simple. Notice every time the moving averages cross. Whenever you have the fast-moving average cross above the slow-moving average, you have a positive MACD line. The MACD line crosses above, at the same time the fast-moving average crosses above the slow-moving average. And whenever the slow-moving average crosses above the fast-moving average, you will see the MACD line cross down below the zero line. So if I was to turn off the fast and the slow-moving average, we can simply rely on the MACD line, and we know for sure that whenever we have a cross above the zero line, this is the zero line right here, whenever we have a cross above the zero line, we know that there's a positive moving average crossover, and whenever the MACD line goes below the zero line, we know that there is a negative moving average crossover. So all you need to know for this exercise is the moving average crossover is the same thing as the MACD zero line crossover. Don't get confused. It's not complicated. And tomorrow I'll show you how to put everything together. So let's just quickly review one last time. Whenever you have a positive moving average crossover, you will see the MACD cross above the zero line. This is the zero line right here. And whenever you have a negative crossover, meaning the slow moving average is crossing above the fast moving average, which means the trend is turning down, you will have the MACD crossing below, right here you see it crossing below the zero line, and it happens to be at the exact same spot that you have the moving average crossover. That's it for today's tutorial. Tomorrow I will do the third part of this 3-part tutorial, and I'll put everything together for you, and you will get a better feel for using the MACD in real time. This is Roger Scott for Market Geeks. Don't forget to subscribe to our video channel, and also visit Market Geeks for your free swing trading report. Wishing you the best in your trading.